Welcome, everyone. My name is Jacqueline Mack. I'm the creative strategist and creative director of Mississauga Arts Council. And this side is Susan Dernan. She is the administration lead of Mississauga Arts Council. We would like to thank you for attending tonight's TD Cultural Lab webinar, Creative Money with Chris Enns, presented by Mississauga Arts Council. TD Cultural Lab is generously sponsored by TD Bank Group.
The Mississauga Arts Council is dedicated to enabling the growth of the arts by creating opportunity and connection between artists and residents in Mississauga and beyond. Celebrating our milestone 40th anniversary this year, the Mississauga Arts Council is a registered charity dedicated to accelerating progress toward the attainment of our vision, Mississauga as a vibrant cultural community where arts and culture thrive. Our mission is to empower the arts economy by creating more opportunities and capacity, connecting artists to audiences and each other, and celebrating artists' achievements. We would like to acknowledge that the land on which we gather is part of the treaty lands and territory of the Mississaugas of the Credit and the traditional territory of the Anishinaabe, Huron-Wendat, Haudenosaunee, Ojibwe Chippewa, Métis, and most recently, the territory of the Mississaugas of the First Credit Nation, who are direct descendants of the Mississaugas of the Credit.
A couple of quick reminders. Please feel free to turn your videos on. Please keep your microphones muted. If you wish to make a comment or if you have a question, please use the comments section. We will be moderating the question and answer portion of tonight's webinar and ask that you use the chat feature to ask your questions throughout the presentation. If you wish to change the view you're seeing, there is a button in the top right-hand corner with viewing options.
All right, let's get started. We are thrilled to present tonight's webinar, Creative Money with Chris Enns. It's my pleasure to introduce Chris. He's a certified financial planner and opera singer. He spent the last 10 years as a performing artist and kind of learned the hard way that ignoring money doesn't really work. He's the founder of Rags to Reasonable, an advice-only financial planning and money coaching firm that specializes in working with creatives and people with other non-traditional financial situations. All right, take it away, Chris.
Thank you so much for having me. Hi, everybody. That's really like the most important thing I always want people to know about me before we get started is that my background is not that I always understood money. My brain doesn't work in spreadsheets. Math has not been something that I've always considered a major skill. I really did back into all this money thing by making a lot of mistakes. For many, many years, I had the strong, can I ignore this? As just like as hard as possible, and really believed that I was the only person who didn't understand this stuff. Everybody else understood what was happening, and I was the only person who didn't really feel confident in this area. And so I didn't want to speak up because I felt like I might be asked the stupid question, asked the question that wouldn't make sense. So I learned a lot of the lessons that I learned just by making a bunch of mistakes. I got into a bunch of tax debt. I tanked my credit card I tanked my credit using a bunch of store credit cards. And when I finally started looking at this area, realizing that ignoring it wasn't really working, I was really surprised to see that this finance thing was different than I thought. It was less about it being a problem to solve, and less about math, and much closer to my work as a singer and my work as an artist. And look, I want to make it really clear, it's hard to talk about money these days, especially after the year that we've had in the creative community. And this has been different for all of us, but has taken a real hit. It's really hard to talk about money these days. And I'm sure that all of you have had a different experience, both this year and in general. Some of you might feel pretty confident in your money. Some people might be just kind of starting out and getting into this realm for the first time. What I want to talk about today is the idea of reframing money from this problem that we have to solve. Like, I think that's how we often talk about money. If I just work really hard with my money, like spend all Saturday working on it, I can figure out my money and then I'll never have to think about it again. And I really wish that was what we were talking about, because that would be an easier thing for me to sell. It's like, this weekend, okay, buckle down and you'll never have to worry about it again. But that's not what we're talking about. Money is not a problem. It's a craft. Your finances are a craft that are much closer to your artistic craft than they are to any kind of math problem. And that reframe, I think, is a really important one because it means that instead of trying to kind of like figure it all out right now, it puts the time frame on a different level. We're talking about it's going to take time for you to kind of feel comfortable in this area. You know what it takes to build a craft. Doesn't matter how much I want to kind of come into my teacher's studio and say, I want to be awesome at singing on day one. It takes time. And it also means that when we look at how to frame this work, it's about saying, how do we build a financial technique? How do we build a financial technique that no matter if you're just starting out or whether you're somebody who's really confident in this area, you can come back to it over and over again, no matter what's happening. And what are these fundamentals that feed that technique? So for example, in art, in every kind of art form, whether you're a visual artist or whether you're a musician, there are these things that you come back to again and again in your career. For a singer, it's breathing. So often breathing. You come into your studio, you talk to your teacher about working on a really hard passage, they work on breathing. It's the same thing in finance. There are these pillars that we come back to. So what I want to talk about is what are these fundamentals in finance? And I hope that you'll find something that you can kind of take away and apply to where you are. And then at the end, we'll have some time for questions to cover specifics or stuff that I didn't really talk about or get into some more nitty-gritty details of that. So hope that sounds okay. First, fundamental. So I really like to think about these fundamentals in terms of the questions that we ask, because to me, questions are constant, answers change all the time. Remember, we're building a craft, so your money is going to change with you. Both frustrating, but also that's the truth. It's going to change as you change, what you want changes, all of these things. So the question that we have to come to first when it comes to our money is, it really has nothing to do with the numbers. It's what is your money for? I think this is something that's really easy to skip over as we try to get like right into the like, oh, how much should I be spending? I think I need to make a budget. I need to be saving, whatever those things are for you. But it really warrants spending some extra time with being like, what am I trying to do? As artists and creative people, you know this well. Intention drives everything that we do. Intention drives technique. And for those of us that found our way into the artistic realm, generally, we didn't do it to just for the sake of maximizing our wealth potential. I'm not saying that that's because we don't make money. I'm just saying that probably that wasn't the like only number one decision that we made when we were kind of coming into this career. So money for money's sake most likely will not be a motivator for many of us. So the question is, why are you going to go through all of the annoying techniques that we'll talk about for the rest of the session? What makes it worthwhile? What is your money for? Now you can start working at this question kind of from two angles. So there's two kind of big ways that we can answer the question of what is your money for. One is through the language of goals. Planners love goals. You know, it might be, I want to buy a house. I want to get a car. I want to pay off my debt. Really tangible, specific things. We love them because we can put a price on them. We can stretch it out over time. We can make a strategy. But goals can sometimes be really frustrating because if there isn't enough money to fund some of these goals, if it feels constantly like you can't find the money to pay off debt, to save for, a new piece of equipment, to go on that audition trip that you want to do, then it can feel like that goal is just kind of constantly a reminder of how you're failing with your finances, and it doesn't create a very good focal point. So the other way that you can answer that question is through the language of values. So just ask yourself, like, what are the important things in my life? Success, family, pleasure, creativity, stability, freedom. These things that are important that you want your money to be for. What is it feeding? And one thing I find really helpful, and I want you to just, if you've got a piece of paper or something to write with or your phone or whatever it is, just take a minute, 30 seconds, and I want you to do like an old school kind of like guidance counselor style exercise of, if you had all the money in the world, what are you spending it on? So just take like a quick minute, jot down the things that come to mind. It can be everything from like giant things that are like huge about like colonizing Mars and buying a fleet of shipping vessels. Oof, that was a weird one. Or like small stuff, like really great new frying pans or like the highest thread count sheets or whatever it is. So 30 seconds, all the money in the world, what would you be using for? So I'll give you a slight pause in my talking for you to think about that for a second. Okay, so keep on thinking about this. We got a lot of stuff to roll over, so I just want to kind of introduce a bunch of ideas for you. First thing I want to kind of challenge you to do is like start working on this list. Just carry it around for a week. As you walk around the house, be like, you know what I would get? I would get some new art for the wall. I would get a brand new mattress. I would get it, whatever it is. This is a whole big list of potential goals. Then ask yourself, why would that make the list? Why is that something that would be interesting or important for you? So things like a new home can mean 1,000 things to different people. It can mean stability, it can mean family, it can mean, space, it can mean peace, it can mean so many things. So start to extrapolate like important values from those goals. So, and then having two lists. What are the values behind those things? Just start gathering a whole bunch of information. And then when you've got these big lists, this is where we're going to make it complicated. I want you to take that question, what is my money for? And I want you to add the words right now. What is your money for right now? This is one of the hardest questions we have when we're looking at our finances because we're dealing with a finite resource. And it can be really easy to think, when I make X, or I just need one more job, or I just need to make this much and I won't have to make this hard choice of this versus that. But I'm telling you, you always will. Not because you never have enough money, but because your ability to dream will always outstrip your ability to fund those dreams. So the question of, out of the important things, what gets fed first is a really important one to start wrestling with and just start figuring and practicing so that you can have a sense of, first it's family, second it's career, or first it's peace, then it's health, then it's success, or first it's debt, then it's family, then it's however you want to kind of express it. But it's really helpful to start building a little bit of a top 3 list, a top 5 list, a lens to say, what is my money for right now? So that you can start to define what financial success is for you. This is one of the biggest things that I feel like so many of us don't feel like we can put what we actually want at the heart of it. And then we kind of look at these financial tools, but it's not based on anything. And so that after our willpower runs out, we just check out. What is your money for? Having a sense of that, it can start to give you a sense of what is good spending to you and what is spending that is not serving that. What do savings have to be for instead of a generic pot of money, but like action, intention, all of these things. So that's the first thing I want you to think about. Carry these exercises around, build yourself a top 3 list, top 5 list. Again, not specific rule, but kind of work with this question. What is my money for right now? Make sense? Awesome. Okay. So that's the first kind of big fundamental thing. Intention. What is my money for right now? Second thing I want to talk about, the second fundamental is, what do I need? Now, if you've ever been a person who's Googled how to make a budget, a very helpful suggestion is take your average annual income or your monthly income and divide it by 12, and then those of us that make variable income or work a bunch of different jobs have already closed the window. Income is tricky for those of us that are self-employed or have fluctuating income and all of that. It's better for us to start on the expense side. The more that we can know about what we need, the better we're going to be able to make some income goals, map income things out, and figure out that side of the coin. So what do you need? When I say need, I don't mean, what's the least amount that you can have to technically remain alive. I mean, what does it take to run a happy, healthy version of you? So what I want you to start thinking about is, I like to think about expenses in 4 piles. Pile the first. The first pile is fixed expenses. What in your life costs the same every month? Second pile, what in your life monthly spending? So that is everything else that happens in the month, but the amount changes from month to month. Third pile, I'm going to bring up a worksheet in a second that kind of goes this a little bit more in more detail. Third pile, what happens every year, but not every month? This is the oft-ignored pile of expenses. We kind of look at fixed bills, and then we add a little bit of stuff for groceries, maybe some takeout, the odd Uber here and there. But what about gifts and that annual Visa subscription and clothing and maintenance on the car or stuff for the house or all of those types of things. So annual subscriptions or annual costs. And then the last thing we want to look at is your business pile. So like, what do you need to run if you're self-employed? Some of this might not apply to some of you if this isn't a thing, but for those of us that have a craft or self-employed, what do you need to run your business? So I'm going to share my screen here with a worksheet that I like to use, and then I'll drop a copy of this in here afterwards as well so that you can play around with this yourself. But this is basically what we were talking about before. So here's the 4 piles. We have fixed expenses over here. So what I want you to think about, if you're just starting to kind of get these kind of like working on expenses, don't really have a good sense of numbers, don't start with the numbers, start with the words. So just start first by thinking, what do I spend on and what pile does it go in? So fixed expenses are the same every month. We're talking about rent, we're talking about insurance things, we're talking about internet, cable, utilities. For some of you, if you pay utilities, you might find that they go up and down every month. You can, one thing I might suggest is just a random trick. You can annualize your utilities. You can call in often and ask your utility company to give you a fixed amount for the year. They'll average your usage out, which can turn into a fixed expense. But just a general idea, memberships, car payments, anything like that. Second category, these monthly expenses. Now we're starting to get into the area where numbers are a little bit harder. So we're talking about groceries, takeout, pet food, household stuff. Here's how I want you to start. First words, then start building some numbers. But you don't have to go back into 6 months of statements and add things up and do spreadsheets and all this stuff. If you like that, please go forth and do it. Don't let me stop you. It's a lovely way to kind of come up with numbers. But if you don't like that, I give you permission to never do it again. Instead, start just building a thoughtful number. And what I mean by that is like an intentional guess. Take groceries and say, how often do I do a big shop? Okay, let's say I do a big shop once a week. It's about $100 a month. Okay, so I'm at least $400 for the month for groceries. Now, do I go to like the corner store and get like 1 or 2 things once a week as well for like $20 usually? Okay, maybe I do that. Maybe I go to the butcher shop once a month as well. And that's usually around $40. Just start adding up the what do you do and what about does that cost? Or what do you think that costs? And work all these things in. What I really want you to do with these things as you're building numbers is first to think about what you do in your life and then to try to put a number on top of that. And then test it. When you're in the grocery store next, be like, this was a big shop. I thought it was $100. It's actually 140. Okay, so I should go back to my thing. Those of us that kind of are convinced that numbers aren't helpful or we don't think in numbers can often say things like, I just need to spend less. I just need to make more. And I just wish I had enough. But what we create there is 3 unsolvable problems. More than what, less than what, and how much is enough. By putting some numbers on it, you can start to give yourself a shape to push up against. You just want a representation of something, and you want to make sure it's connected to your life. So the same thing can be said for some of these annual things. It's hard to know how much you spend on gifts in a year. So just go through the back of a piece of paper. Who do you buy gifts for? When do you buy them gifts? Do you buy them birthday gifts? Do you buy them Christmas gifts? Are there other events that come up? About how much is it for those different things? Go through, put a value there. We want to make sure that we're connecting things to what you do in your life so that if you're looking to kind of lower an expense, you don't just say, I can change the number from 400 to 375. That should be possible. But you actually have to think, what am I going to change in order for that to happen? So I want you to kind of start building up the words, coming up with thoughtful numbers here. And then what this worksheet encourages you to do is, you see at the bottom here, start adding things up. So take these monthly expenses, put it at the bottom here. Take these annual expenses, put the total here, and come up with an average cost of your life. So all those can be a really, really helpful tool for doing some quick math. All of a sudden, you're not just getting like rent plus $200. You're like, okay, when I do my annual and business things, I need an average of $3,000 a month. Interesting. That can give you a sense of like, if there's a lump sum. So for those of you that are a student, that might be a student loan. It might be a grant that gets kind of given out. It could be a big gig that you get. You get a $6,000 paycheck. That's not just $6,000. That's 2 months. You can kind of see that really clearly. If somebody offers you a gig that's going to take most of the month, but they're only paying you $1,200, and you need around an average of $3,000, you know that that's not quite what you need to be doing to stay on track. So at least you're looking for like, are there other intangibles that I'm not getting? This has to be really worth it because it's not really keeping me on track. It's a really great number to have rolling around in your head and to keep working on. And what it'll help you do as well is to give you something to push up the game. So if you're coming up there and you're like, well, I'm thinking about buying a new car, but I'm not sure what I can afford. You can say, okay, interesting. What does that change about my spending? You can kind of go through the different categories. Say it adds a fixed cost of maybe a payment every month and an insurance payment. It adds a monthly cost that changes of gas, and it adds an annual cost of maintenance that comes up. So you can go through and just really think about what is the whole cost of something and not just say the car payment costs $244. I can do $244. It gives you something to push against and kind of change and evolve with all the time, and something to, like a bucket to start filling up on the income side of things. Does that make sense? Maybe a little bit? What do you need? So I'm going to drop two versions of that worksheet into the chat here. One is for the year and one is for the next 3 months. So if you're somebody who very understandably can't think about a year from now right now, that's just too much mental strain, pick the next 3 months. If the next 3 months is too far, pick the next month. It's okay. We're working on building a craft here, remember. So it doesn't matter if your right now isn't very long. It'll all help to kind of move you forward. So play around with those expenses a little bit. And then it's a good opportunity to kind of come back to that first question a little bit. Take a look at your spending. Does it line up with what you're trying to do right now? Does it line up to those goals and values? What does? What doesn't? Not saying everything has to change right away, but just saying that. I know that there's some visual artists here, and one of my favorite things that I learned when I was starting to learn how to draw. I'm a terrible drawer, but I'm a great enthusiast. All of my drawing books started with the instruction to learn how to look. And I think that's such an amazing reminder for when we're starting to kind of come into our finances. It doesn't start by changing everything or getting something right or wrong. It's just learning how to look at it. What is actually happening? What do I think is happening? What's moving here? What does this cost? What do I think it costs? Paying more attention. If you're just getting started, building awareness is the best place to start. And that can be writing things down, or it can literally just be saying after you spend money, I just spent $60 on Indian food takeout. That's interesting. Not terrible. Not I'm a bad person for doing it. It's just a thing that happens that you can now work into some of these costs and kind of become more aware of them. So build awareness of both the monthly things and those annual things when they come up. Oh, there's a Visa subscription. Haha, you got me this time. But next time, I want to try to be more prepared. That's the second question to kind of start working on. Okay, so when we got that expense side, we can start thinking about how do we fill that need. So one of the words I really want to talk about when we start introducing income to this equation is the idea of balance. Because I think it's really easy for us when we're trying to figure out, like, how much do I need to make to have numbers in mind? I need to make 80K a year, 60K a year. When I'm making the six figures, that'll make things better. But what really matters most is the balance between your income and your expenses. There are people that make $300,000 a year that spend $350, and they are very stressed. And there are people that make 40 that spend 25, and they are less stressed. The balance between your needs and what you can kind of bring in to fill those needs is where the kind of work gets done. So the first thing, though, that we need to talk about before we look at income is the idea that if you have that number, an average number of $3,000 a month, it doesn't mean you can just make $3,000, because largely due to a wonderful thing called taxes. So there's a certain amount that the government needs off of your income before you can start giving yourself the amount. So when we're trying to figure out how much you need to make to fill that need, we need to talk about taxes a little bit. And so I'm a financial planner and not an accountant. I work with tax, but I'm not like, I don't do people's taxes. I'm not going to like get into the nitty gritties here. But I do want to talk a little bit about the general kind of fundamentals of tax, the general idea. So the first one I said, this idea that expenses doesn't equal income. As self-employed people, we don't get paid, we don't get taxes taken off our checks when they get sent to us. So we're responsible for taking something off and putting it aside for taxes. If you remember nothing else about taxes and self-employed people, a really great habit to get into is when I get paid, I take something off and I put it away for tax. And what I mean by away is a separate savings account nicknamed tax that is like not connected to what I spend with. If you're somebody who can't see a savings account in your bank and not spend it, put that savings account with a different bank. But get used to this habit of money comes in, I take something off, I put it aside. If you're just starting out, I know there's a couple people that just graduated, build the habit. It can be as low as money comes in, I take $1 off, I put it into this side account. The habit is more important than the amount at the beginning. You can always grow something, but remember that more money amplifies current behavior. This is why I'm a big fan of, no matter where you're at financially, trying to kind of like build spaces for the things you want to do. Try to build paths, build habits. So when there is more money that comes in, you don't have to go through the work of doing that then. You can have these pathways that you can just expand. I'm used to putting aside $1. I got paid a bunch more than normal, so I should probably increase that. So habit, having that separate. The third thing, and this is where it gets tricky, is this like, how much should I be taking off my checks and putting aside? And the reason that that's really hard is that there's no hard and fast rules. You know, we could all be making $40,000 in the year, but we could all be paying different amounts of tax. And the reason that that is, it's because of something called deductions and write-offs. And I'm sure that for some of you, this is a really familiar term. We throw these terms. It's one of the few things that we talk about in the arts as far as like the financial conversations about like, oh, don't worry about this dinner, I'm writing it off. It's always said in that very, Shit Creek. I don't know if you've seen it. David has a wonderful diatribe about writing things off. It's also said like it's a bit of a magic wand. And so for any of you that are a little bit like I was, not super clear on what a deduction is, allow me to kind of hopefully clarify it a little bit. The idea of a deduction is that for those of us that are self-employed, we have to spend a certain amount of money in order to make our money. So if we're making $30,000 in the year, but we're spending $2,000 on materials for visual art projects, or subscriptions for digital art, or instrument repair, or voice lessons, or any of these things, this is money that we need to spend in order to make our money. So what the government allows you to do is to take that amount. So let's say we spent $2,000 on those type of things. We made $30,000. Made $2,000 or spent $2,000 on those types of expenses. The government allows you to deduct that from the whole amount that you made, which we call the gross amount. $30,000 is gross because it's so large, and we take away $2,000 off of that and only get taxed on $28,000. So on the remainder. So a deduction lowers your income that you pay tax on. It's not free money, but it will lower the amount of tax that you pay at the end of the day. So it's a good thing. It's a powerful thing. It's not a free thing. So what is, again, the idea that we could all be making $30,000, but our deductions might all be different. So how do you think about that? And especially, how do you think about that this year when it comes to things like CERB and when it comes to a really different amount kind of coming off? One way to kind of play around with it a little bit is to jump into it's a little simple tax calculator that I like. I'll drop the link into the chat after, that I find helpful to just play around with a little bit. It's not too complicated, which means that it's missing some nuance, but it'll give you a general idea of what you could owe. So let's say you're in Ontario. You can pick any province, but let's go with Ontario here. You're in Ontario, and let's say you go through and you say, I made $14,000 last year. Now remember, the number that we're talking about here is your taxable self-employed income. So remember we talked about gross and net? This is the like after deductions amount. So if you made $14,000 of self-employed income, and over here at the bottom here, there's a space for CERB. Let's say you received $8,000 of CERB. What this will show you on the side is the total tax that you could end up paying. This is the high amount, not necessarily taking into account things like education credits, some other credits, your specific situation, but it'll give you an idea. You can play around with this a little bit more as well. Maybe you made some employment income. There's also a space here at the bottom for if you had some jobs that took off tax, you can enter that down here as well. Basically, what this will kind of give you is a general sense of what the max amount you could pay is. And it'll also give you this percentage down here, this average tax rate. So this is how you can start figuring out for yourself how much you should take off to be safe. So let's kind of take the CERB out here and say in a normal year, I think I make around 30,000. Well, down here, it'll show you an average tax rate of around 20%. So that might be a good goal to kind of start saying, I'm trying to take 20% off of what I make and putting it aside. It's just a way to illustrate things. If you're not sure, if you're just getting started, this can be a good way to give you a couple of numbers to work with. If you've been going for a while, if you're an established career, it's a nice thing to look at past tax returns and just really look at what's the amount of tax that I paid, what's the whole amount that I made. You can come up with a bit of a percentage there. But I find this calculator helpful for especially playing around with some of the CERB conversations. In conversations with a few accountants that work with lots of arts people, because I know that taxation around CERB and the CRB is something that lots of us are stressed about in the creative community. There may be some extra tax bills that are coming through. I know I spoke with an accountant that had done a few tax returns, and she had noticed specifically that people that were used to making kind of net, kind of after deductions in that $11,000 to $14,000 range and used to getting a rebate, the impact of CERB could often kind of take away that rebate and mean that they were owing a little bit of something. I won't go into the details too much because it interacts with a credit that changes things around a little bit. There could be some extra tax point. I think that the most important thing is play around with a calculator like this, have an idea of what you could owe, not because you can necessarily put it aside in the next 2 months. Maybe that's possible, maybe it's not. But just to know that there might be some tax debt that has to be paid off over time. The CRA is currently offering kind of extended payment plans. Usually they limit yourself to over a year. They've been offering lots of my clients over 2 years, which really stretches things out and can lower that payment that you pay. It's a thing that might happen for some of us. At the same time, back in last March when we were receiving the CERB, lots of us couldn't afford to put aside money for taxes. It's okay. It's something that's happening. And I hope that if there is some debt, that it can be something that you don't kind of beat yourself up too much about. It's about kind of knowing it and then working that cost into your needs so that you can pay it off over time. Is that a helpful thing? I know with taxes, it's like a lot to talk about. Might be a decent place to pause. Is there anything specific around taxes or around kind of CERB and CRB that people are really stressed about that you want to talk about? Or is that an okay overview to kind of get us started?
I say it's an okay overview.
Okay, great.
Myself, yeah.
Yeah, awesome. Feel free to think about it as you go, but that's the general idea. Another thing, just for a couple of people that are, I know you're starting your careers, when we talk about deductions, a few things to remember are make sure that you think something might be a business deduction, keep a record of it. keep some kind of what's the language that the CRA says? They want a proof of purchase. So that might be a receipt. If your teacher doesn't offer a receipt, it might be just something they print off that says, I gave these lessons on these dates for this amount and I signed it at the bottom. They need a proof of purchase so that you can prove that you actually did it, not just a number that you wrote down. Be reasonable. I really think it's important to remember when you're talking about deductions that if somebody were to challenge you on something, they're not somebody who knows your field. I've heard lots of interesting stories about people that have musicians that have been audited, and some of the questions that the auditors ask about the necessity of instrument repairs or having an instrument at all. You say, oh, right, you don't understand quite how this business works. So really thinking about, could I justify this to somebody outside of my industry that it was important for me to have in order to make money? And the big thing is that if you're not sure, just ask. Ask your colleagues. If you can afford to work with an accountant, ask an accountant. It's okay not to know. There's a lot of stress when it comes to tax things. Nobody knows it all. That's okay. Don't worry about it. Just ask and you'll learn slowly. Every year will get a little bit better. The other thing that I know that lots of people have questions about sometimes is the idea of HST. HST is something that comes up for us when we're making, the rules are when you're making $30,000 or more, you can start worrying about starting to charge HST. I don't want to get into too much of that, and we can kind of get into the Q&A if it's interesting to anybody, but the two things that I want you to kind of ground to are $30,000 of self-employed earnings. Before that, I do not need to worry about it. And by practicing taking off money right now and putting aside for taxes, you're setting yourself up for success when and if you need to be charging HST on services. So I'll leave it at that right now. Practice the habit now. It'll pay off later. We can kind of go into some more detail later if you'd like. Okay, how's everybody doing? Good? I know I'm throwing tons of stuff at the wall, but I hope it's kind of like there's some things that are helpful. First fundamental, what is my money for right now? Second, what do I need? Third, how do I fill that need? So now we're talking about the income side, and income is a really hard thing to wrap your brain around if you're somebody who's self-employed or works multiple jobs or works jobs where the amounts change all the time. Whatever that is for you, it can be really tricky to know, am I making enough? Am I setting reasonable expectations? So this is hard, but here's some things that can start helping a little bit. First, what we want to say is we have our needs. We want to say, like, what is the amount that we need to fill that need? So we put that tax amount into the equation, but we want to start just sorting our income a little bit. So I like to put income into 3 different piles. Start to look at, what do you have at your disposal? First, regular income. By regular income, I mean fixed income. Do you have anything in your life that is the same every month? That might be an employee job. That might be a government benefit. Anything that's just like fixed expense, the same every month. Next, what's kind of like, do you have irregular sources of income? By that I mean, do you have something that happens most months, but the amount changes from month to month? Now we're talking about things like teaching, talking about things like serving, we're talking about things like doing film work, or things that kind of are up and down. It's hard to kind of get a good idea of how much you can expect. So the piece of information that's really valuable around those sources is, what's the lowest amount that I've made from those sources, and what's the highest amount that I've made? That's going to start giving you a sense of what's the range that you have to play with and how to plan forward. Talk about that a little bit, but that's the kind of information to gather. Fixed income, irregular, happens every month, but the amount changes. And then the third kind of area is gig and lump sum income. So these are like one-off gigs, one-off jobs that kind of happen, from time to time. So what lives in those piles? And then how do we start mapping it out? So this is something that you can do on the back of a napkin if you want, but because we haven't looked at a spreadsheet yet, I do have a sheet here that I'll share with you as well that can just start to kind of get what's in your brain out in front of you. So the goal here is I'm going to make it a little bit bigger. I realize that is far, far too small. Is that better? See a little bit better? Okay. So what we want to do here, this gives you a way to start saying, what are these types? What do I know about them? So let's say you have a fixed piece of income that gives you $200 a month. So I've got that here, stopping in June. We just want to try to get these things out. Next, we've got our teaching income. So let's say on a low month, you make $100, on a high month, you make $1,000. Okay. So what can you realistically expect here? There's two ways to plan with these kind of ranges. One, you can take the lowest amount. That's the least stressful thing to plan with, because if it works, great. But often it's too low. It won't quite be realistic with what you can actually bring in. So what you can do is use the averaging. So it's kind of a middle point, something that seems reasonable, that you're like, I know I can make this from month to month. What I really want to kind of can steer away from is that sometimes that when we're doing these kind of mental math in the back of our heads, we can use the top amount for all these things. Oh, I teach and I serve sometimes. I can also temp over here, and you'd be like, and I can make the top amount that you've ever made from all three of those sources. And then we wonder why we're stressed because we can't reach that amount. The point of doing this planning is to try to ask yourself, what's reasonable and how does that match up to what I need? Because if the expectation is that I need to earn the most I could possibly make from all the sources of income in my life, that's a stressful position to be in. So using the average amount, something that seems reasonable, will help you kind of just look at what's possible within this bound. So I used $450 for these teaching income for these months that we're looking at. And then we can put gig income in here. So in this example, we said there's a big lump sum coming in January, and then there's a potential gig that I'm not quite sure about, but I wanted to put this in there because I'm just trying to unload my brain. That might be in July for $750, and going through and being like, what do I know about the income that's coming in? Then we can start to see a little bit of a shape of the year. We've got the green bars that are income, and you'll see this red line down here. So at the bottom of this spreadsheet here, there's a line for what you call your monthly draw, but that's just your number. So that's your number from that other worksheet of saying, if I need an average of $3,000 a month, how am I doing at that? So for January, I'm good. And then I've got a gap for the other months. This is a really helpful thing to start to see, because what it can do, instead of saying, I need to make more, I just need to make more, I need to make as much more as possible, it gives you an actual problem to solve. Now, I'm not saying a $2,200 problem is a fun problem to solve or a non-stressful problem, but it gives you something to actually work on. You can take that and say, what is that in lessons? What is that in this job? What does that mean in hours over here? Where can I potentially fill that? And what this sheet can do a little bit too is to show you, for lump sum sake, so in this example, we have a big lump sum coming in January. It's actually above this red line. You'll see on the right-hand side that it'll show you how long it is until you run out of money. So January and February are okay. March starts to get stressful, because one of the things that happens when a lot of us get paid lump sums is, okay, I got extra money, right? So I can, go for a really nice dinner. I can get that thing I've been waiting to get. I can put a big lump sum payment onto my credit card. But when you stretch it out, you can actually see it's not really extra. That amount in January is needed for February's bills, because we don't have income that we know about coming in the future. So by stretching things out a little bit, it can give us a way to start visualizing where the gaps are, and are you in balance with your expectations of that spending number? Does that kind of make sense? So playing back and forth, I'm going to drop a copy of that sheet. Basically what it'll do here, it'll prompt you to copy it to your own Google Drive. So you'll have your own copy, so that way we're not all trying to work on the same copy. So if it's helpful to have a spreadsheet version, you can use that one. If you just want to map it out, literally draw on the wall, on a big piece of white paper, draw the year out. What do you know about income? Just try to externalize some of these things and identify how much gap there is between this need and what you have to fill the need. Then we can start talking about balancing. If things aren't in balance, you've really only got two levers. It's increased income or lower expenses. And income is a little harder just because somebody else has to say yes. So coming back to this and returning to your expenses and saying, I'm out of balance right now. Where can I lighten my expenses? Can be an interesting exercise. But again, instead of just saying I need to spend less, you have a bit of a criteria to work through. So going back to that, saying what's important to spend on, what's not important to spend, where can I afford to spend less so I have more for this? Going through that can be a valuable exercise. Most importantly, again, when you're looking to balance, you're not solving a math problem. You're not trying to get the numbers to match because that's the goal of this. You might find you can't cut any more expenses. We've lived through a last year. I know a lot of people have lowered the expenses that they can. At a certain point, you're just done. It's not realistic to lower them anymore. And I would way rather that you be honest about what you need versus putting all the categories down to zero. I have zero money for clothing and gifts and personal maintenance. Put down what's real and honest first. Better to have a gap that you know than have it balanced and you know that it's not true. The truth is, if there's $1,000 gap every month, maybe that's coming from your line of credit. Maybe that's getting drawn from savings. But by knowing, you can start making deliberate choices about that instead of it feeling out of control. And it can give you a sense of, in the future, knowing how much you have to close that gap. Make sense? Ish. I know, it's like a big thing to work on. Now, there's two other things to think about when we talk about balance, because we can balance things out in the short term, but that doesn't change the idea of these spiky expenses, expensive months. Let's say something breaks that's expensive, or if you're somebody who celebrates Christmas or another very expensive holiday, we get those big expensive months. And we also have income that doesn't come in smoothly. It's going to come in big chunk maybe in January, big chunk in March. So there's two things that you can kind of techniques that you can start to use to take the sting out of variable expenses and income. So with the expenses, what helps is to start smoothing out those spiky expenses over the year. So when you're filling out that annual kind of category, I'll use Christmas as an example again. I know this doesn't apply to everybody, but it's nice and far away and it's generally expensive. So this idea, if you spend $700, $600 on Christmas, instead of waiting for that to hit, if you can put away a little bit every month so that you have something ready for that month, you're going to take the sting out of that spike. And the great thing about this idea is that even when it fails, it works. So if you're trying to put aside $50 a month so that you have $600 by Christmas, even if you don't, you'll know. So in November, you'll say, haha, I don't have the $600 that I thought I'd have, but I have 140. Okay, that means you need to be creative. It means you need to be kind of like, there's going to be something that has to shift. There's going to be something that has to change. It gives you the ability to kind of plan and create and to problem solve instead of reacting in January and February to something that happened that you didn't quite, keep your eyes on. So smoothing out those spiky expenses by putting little bits away. Income is hard because you can't smooth out somebody else's income. You can't convince them to pay you over 12 months. What helps with income is creating a buffer between you and the income that's coming in. My terrible analogy is those cereal dispensers. I don't know if you ever lived in a dorm or these things, or just watch TV with these like giant cereal dispensers with a crank at the bottom. What we don't want is to pour the cereal in and to go straight into the bowl. That's the idea of the most stressful situation. Comes in, I need it for breakfast today. What you want is enough cereal in that dispenser so that you're using cereal that you poured in last month. And if the cereal doesn't get filled up every day, you're still having breakfast every day. The metaphor breaks down because old cereal is bad, but old money does not go bad. So works. Build up that buffer of starting with 1 month of expenses from that, your number, that full average idea of what your cost of your life is, between you and money that's coming in, and you'll start to feel more just space in the way that you can spend and use money. Again, even if it fails, you're still ahead, because it means that money that comes in, they'll say, haha, I'm lower than normal. So I'm going to have to, it's going to be a leaner month, versus just in the middle of the month saying, I guess I'll just keep eating beans until maybe there's enough to come through with my rent. So building up that buffer is really the only thing that helps take the sting out of variable income. Eventually expanding that to be 2-3 months can really make you start to feel confident and kind of have that space to weather out some of those low zones before another kind of spike fills things up. Okay, so we've talked about what is your money for right now. We've talked about what do you need. And then we've talked about what do you have to do to kind of balance that need and how to kind of think about income and filling that up. The last fundamental that I want to talk about is how do you stick to the plan? So like, great, I've got numbers that kind of balance. I've got an idea of putting aside things for expenses, but like actually, like what does that actually practically mean? And so when we talk about systems or tools, for me, there's only one kind of core idea that works, and it's the old school envelope system. I don't know if you've ever used this or your parents use this. It's like literal envelopes with names of things, cash stuck into the envelopes. And basically when money is out, like finished in your rent envelope, it is empty. When money is finished in your grocery envelope, you have to move things into the grocery envelope, or you're done spending on that thing for a while. It's a great idea, but practically not the most useful thing for how we actually live our lives. But we can use this concept of cash to actually still meet up with, modern finance. We can build an envelope system either with an app or with bank accounts. So I'm going to kind of show you examples of both, but we're going to start by showing you how it can kind of work with bank accounts. And we've already actually kind of talked about it. This idea of just having taxes aside in a separate account is creating an envelope for tax. That's what that money is for. I put money aside. You have purpose and intention, keeping that away from the rest of your money. I want you to feel confident about playing with this general idea, but I want to show you some examples of what it could look like in a way that I've had people kind of, it's been successful for people in the past. So this example, on the personal side, you'll see a whole bunch of boxes here. These blue teal examples are 2 checking accounts instead of one main checking account. One that we use just for your fixed bills, and then one for all the rest of your monthly spending. And the reason that some people really like this is by separating out the money that you need for your bills, you don't have to be stressed when you're like at the grocery store or going out for a drink that you're accidentally spending your cell phone bill money. You can just put that money aside for the things that you know are already spent, and then have this other sum of money that we can use our skills for, because a lot of us that make variable income are really good at when there's lots of money, we spend lots of money, and when there's a little bit of money, we spend a little bit of money. We're kind of like goldfish. We grow to the size of our own bowls. So the spending account can give you an amount that you can just look at, and that's what you've got. It doesn't matter if you spend more on groceries or dining out or takeout. You don't have to track every penny. You just have an amount that you pay down. And then what you can do here, these yellow accounts are all separate savings accounts. So you can, when we talk about putting aside money for these annual spending things, these annual ideas, smoothing out the spikes, you can literally do that with different envelopes. Some people have like one envelope that they call annual spending, and some people have like 14 envelopes that get super specific. Either is fine, but what you can do is just have them there. And when you can, transfer money into those accounts to kind of chip away at some of those things that you know are coming. Dental visits, haircuts, that Visa annual fee, whatever those things are. Even if you don't have a lot of money right now, you can still create some accounts so that when there is, it reminds you of what you want to be funding. Now, some of you might be looking at something like this and just seeing potential for bank fees. And that's a really good point. often, no matter who you're with, you can open up e-savings accounts for free. And most banks allow you to nickname your account so you can get some real specificity around what you have. Adding an extra checking account with any of the big six banks, but I'm talking about TD, RBC, CIBC, those banks, can add some extra fees. It can be worth it to kind of have the extra kind of structure. Or you can look at using a bank like Tangerine or Simply, which are examples of online no-fee banks where you can open up multiple accounts without kind of incurring any extra fees. And you can kind of take that idea and actually expand it out. So I want to show you this. I know there's kind of like lots of moving pieces, but just to show you what a next level of using these account systems can actually look like. So in this example, we've expanded from just have the personal on the right-hand side of the screen, and we've added a business side on this side. And this is a system that basically, it allows you to pay yourself a fixed salary every month. And I want to tell you that if you're making variable income, this is a possible thing to do. It takes some time. You have to build up some buffers and all of that. But this idea of being able to pay yourself your own CERB or your own salary that kind of meets with what you need is possible. In this example, we have money coming into, I like to call it a sorting account. And then we sort it into three piles. We sort every dollar into some into a tax account, some into a business account, and some into a salary account. Now, this salary account is where we kind of store that that buffer. Remember that variable income buffer that we were talking about, that 1 month to 3 months? And so this is where we have that buffer, and then it pays out to these personal accounts a fixed salary every month. This is based off of loosely a system that's from a book called Profit First. So if you're ever interested in reading about it and kind of coming up with the source material a little bit, you can kind of dig into that a little bit. There's also a really good book that talks about structural banking by a financial planner in Toronto called Worry-Free Money by Shannon Lee Simmons. She's awesome. But this is an idea of how you can use bank accounts to create some intention around your finances. Now, if you look at all these bank accounts, you're like, I don't want to do that. Having that many bank accounts is really stressing. It's stressing me out to even look at that. You can do the same thing with an app. The one that I really like is called Ynab. It stands for You Need a Budget. You can Google it. You find it by Googling I Need a Budget. And it looks a little bit like this. We have line items. Looks like a fancy spreadsheet, really. We have line items that each act as their own envelope. It encourages you to put all of your dollars into these different envelopes, but you can have one account and then put this on top of it. Ynab isn't a free app. It costs, I think, $5 a month, but you can try it for free for 34 days to see if it's your thing. There's a bit of a steeper learning curve to this kind of thing, but it's a really cool company, and it has a really great kind of support mechanism for when you're getting started, like an onboarding and helping you kind of figure everything out. So that's another way that you can use the same envelope system to manage things. This one works really well for variable income because you can budget in future months. You can play around with, different amounts, lump sums that come in. I found that it works better than some of the other budgeting apps for people who make variable income. So that's basically the four fundamentals that I really wanted to talk about. And it's important that no matter what you're trying to do, whether you're trying to pay off debt or you're trying to save or you're trying to do something different, these are the same things that we come back to over and over again. So, for example, if debt paying off is something that you're really working on right now, one thing that I see a lot, and I've been in myself, is this idea that we get trapped in this debt cycle. We have debt, we work really hard, we put big payments onto our debt, and then we end up having to use the debt sources again to cover expenses. One of the big things I think, if you're paying off debt and thinking about that, to think about is the idea of building debt resiliency before aggressively paying off the balance. So looking and saying, where did this debt come from? Did it come from because I didn't have the money to cover some of those annual things, those like house things, vehicle things, clothing things, gift things? Did it come from having a really low income summer or a low income couple of months or a low income pandemic, which nobody could plan for. Okay, what's going to help kind of protect against that a little bit? So maybe building a buffer for a little while can be a really helpful thing to do before aggressively paying off that debt. So think about the why behind it and try to make yourself resilient to that thing that caused the debt first so that you can pay off debt for the last time. It's the same thing with savings. People say we save in big chunks, but then we have to kind of claw it back for other things. Just be really clear about kind of building your stability net, these different things that you need, so that when you are paying off debt or kind of putting money into long-term savings, that it can go one way. That's going to be the less stressful way to think about it. Okay, so I'm sure I've talked at you for long enough. You've all been troopers for that. I hope that there's some useful things there. We want to kind of have a little bit of time for questions. As you can see, I can definitely talk at you longer if need be, but does anybody have any questions? I saw there was a few about HST. In general, either about stuff we talked about or anything about finance that would be helpful to discuss.
We have a question. Was the minimum 30K HST changed to no minimum for services?
No, is that question about whether it was? No, it applies to both goods and services. The $30,000. It applies to both. I'm not sure who asked that question. Do you want to, if you want to come off mute and kind of give me a little bit more details? But I don't.
Yeah, I think it was at one time they removed the minimum.
Okay.
It might have even been 10 years ago, because at that time, then I was doing bookkeeping, so I had to get an HST.
Okay.
So I got one. So this is news to me that it's now back up to 30. I think it was like, it was 2,500 or something. Anyway, I'm glad to hear it's not the case anymore. I think that's helpful, but I still continue to charge HST because I can claim it back on big purchases, which works to your advantage. So
exactly, and actually, I see that that's another question that's asked, is this idea of what is the advantage of charging HST? And Karen kind of alluded to it a little bit. This idea that you can get an HST number before 30,000. You just don't have to get it before 30,000, and it's not all a bad thing. So the trap is, once you have the number, you're responsible for collecting HST on all of the services that you provide. Now, slight proviso, that does not include music lessons. It's one of the weird reasons, that one of the few times that music is mentioned in the tax code. So music lessons are not added into counting up this 30,000. And even if you have an HST number, you don't have to charge HST on music lessons. But everything else, if you're doing a gig or something like that, you have an HST number, it's your job to charge in Ontario an extra 13%. Take that amount, put it aside, and then remit it to the government at the end of the year. The first trap is, I just got paid an extra 13%. Great, perfect. And I spend it. Trap. So if we practice this idea of taking off money for taxes right away, then you're ready for that to kind of happen. And as Karen said, there's an advantage here because you can actually claim some of your business expenses, the HST that you spend on them, against the amount that you owe. So, long story short, if you keep really good records, put aside all that HST and collect the deductions, you may not have to return everything that you put aside. So you might have like some left over for your trouble. So practice the habit anyways, avoid the trap of spending it, and you should be in good shape.
I have a question, and that is only music lessons or all sorts of, like, would painting lessons also be not HST chargeable?
It's a good question. I was reading a bulletin on this the other day that is not clear enough in my brain. It says music lessons. So I know that they were specifically talking about, like, is a theory lesson a music lesson, but I don't know if they were talking about it. It doesn't specifically broaden that to art lessons, to dance lessons. So I'm not sure. That would be a question that I would say definitely ask your accountant, but I can't answer that with confidence.
Yeah, feel free to unmute yourself and speak up with any questions at all. I myself find this really insightful, especially with the mapping. I'm going to call that the mapping calculator. The spreadsheet is very useful. I've played around with it, plonking in the numbers, and it already calculates it for you. And that's a very, very good spreadsheet. And I urge everyone to look at it and use it. It's really, really well designed. Thank you.
No problem. I'll notice too that, yeah, I can definitely post the spreadsheet link in the chat again. One thing that you'll also see on that sheet in the corner, please feel free to cut me off at any point, everybody with actual questions. But what I'll show you here, just because I'm nerdy about spreadsheets, this is a new thing, weirdly. You'll also see in the corner here, there's an amount where you can put the amount of tax that you want to take off. So right now that's set at 15%, but you can change that up to 20 here. And then anything that you check the box for that you want to make sure tax is taken off, it's going to make sure that these calculations that it does over here are for net income, not the whole amount. And it'll actually show you at the bottom here, has a line here of how much you should be taking off for that month and putting aside in a tax account. So that's something else that sometimes can be a little helpful, and in making sure, again, that you're planning with after-tax dollars. So getting used to that idea. Money comes in, you put the tax aside, and you're only planning with what's left. So that's a really good habit to get into. Again, even if you're starting and it's just $1, doesn't have to be 20% right away. I would way rather you find a percent or amount that feels possible to go one way rather than saying 20% is great and then having to raise your tax account all the time. Better that money goes one way and you don't have to kind of go through that mental angst of saying, oh, shoot, I have to spend my tax account again. You know, this is so frustrating. I'm failing. It's so many minds for like feeling like we're failing in finances. It's a craft. You're going to make mistakes. Try to extend as much curiosity and play into this arena as possible so that you can just give yourself permission to do it, because it's going to happen anyways. So you might as well not beat yourself up every time it happens.
Awesome. We actually have another question for you, Chris.
Yeah.
It is someone's first year being self-employed. Congratulations. She's wondering where she can find information on how to fill out the self-employment tax form.
Okay, so are you thinking about filing yourself, like going through that, doing it yourself?
Yes.
Perfect. So if you're using a software like something like TurboTax or something like that, there's a lot of resources as you're going through where it'll just say, this means this, this means this. If you're filling out an actual paper version, even though they do have like in CRA speak clarifications, but the language can be a bit tough, you are going to find yourself kind of Googling things a fair amount. Like that is one of the advantages of some of the more kind of using it, something like, not think TurboTax is the best, this is the only one I can think about right now. Like TurboTax, it does give you some support as you're going through and some idea of how to calculate some of those things. That's really the best source that I can kind of think of to kind of to follow you as you go. In general, a resource that I found valuable if you're ever interested in learning more, I mentioned Shannon Lee Simmons before. She's got a really cool site called the New School of Finance. And she has a bunch of courses, online courses that she offers, including like a sole prop tax school. Sole prop stands for sole proprietor. So if you are a self-employed person in Canada, but you're not incorporated or anything like that, they call you a sole proprietor. So they got like a sole prop tax school. She also has like an HST course and things. So if you want to like have some that kind of learning, if that kind of learning is interesting to you, that might be another kind of piece of information there.
Fantastic. Thank you.
Okay. Does anybody have any questions?
I know we've all had so much information. We're just trying to digest it and the wheels are spinning and we're all processing. So
yeah, the documents are so good. I'm really, really enjoying looking at them and all the paths and resources. These are really great worksheets. Thank you, Chris.
Not a problem.
Okay. I've never heard anyone talk about taxes and saving and putting things away so passionately. It makes me want
And
to
to make it
just,
so interesting.
exactly. There is a creative way in looking at things from a different perspective. And like you said, I've never thought of finance as a craft. And you made it so that it's applicable, it's present, there's longevity, and it's not scary because this is a very intimidating topic, just talking about money and income in general and looking at numbers. So this was very, very insightful, and I thank you so much. Yeah.
It's my pleasure. It really is. Like, I think there's so much in the artistic community that we've been told that this is not our thing. And that would be fine if we didn't have to do it. We can, every other people get told that, opera is not your thing. And then they can just go live their life and not go see an opera. But we're told that money's not our thing, and then we have to do it. So trying to find a place where you can belong in this conversation, for me, it's trying to say, how can you make money another way that you speak into the world, and take it from something that is kind of divorced from who you are and make it another part of your regular life. It's complicated, but it's not complicated because of tax rules and like annoying financial acronyms. It's complicated because it's rooted in identity and behavior and who you are and what you want. But those are complicated questions that we face all the time as creative people. So trying to connect it to what you do already, because if the plan is you need to be a completely different person to be good at this, it's probably not going to happen. So taking some of that idea of like, this is impossible, and saying, well, maybe it's not. Not saying that like it's an easy path, not saying that like, oh, just do this and, stressful times like the last year will never happen again. I think that because we know that, we know as a performer, technique doesn't mean you don't get sick on opening night. Technique just means you have something to reach for when something happens. So just to kind of continue to build that. I see that there's a big long question in the chat here. Let me just read it here. I'll read it aloud so everybody can do it together. I have a separate business and personal account. What I find I'm doing is leaving all my money to in my business account. I'm doing this because I work with clients from big organizations that are really slow moving on paying invoices. Yeah, totally get you. Multiple months sometimes. I need to pay contractors in the meantime. So I get paranoid about moving my money out of my business, putting in my personal account, paying myself a salary. Do you have suggestions for figuring out approximately how much I should leave in my business account in order to be able to cover contractor fees? It's hard to know when the contracts are so variable. I don't always hire contractors. Yeah. Okay. So what's going to help here is a couple of things. So one, just really diving down on what you need. And so the first side is kind of having a sense of like separating out that business account. Do you have a separate tax account as well? Well, you can answer that as you come to it. To be like, that's something to kind of separate out specifically. And then when you look at the business side, what you really want to do and what you're kind of speaking to is like, what's the safe amount to have in this account? So already you know that you're trying to kind of like have enough money to kind of bridge these like income gaps, which are often multiple months apart. So being like, okay, so even sketching out a version of your last year. So using, just kind of saying, okay, in my last year, these are the contracts, this is kind of when they happen, this is how much they cost. This is the more expensive contract. So this is one where I hire contractors. This is the one I'm kind of afraid of. I want to be able to afford to do this even if people haven't paid, and maybe use that as your avatar. So coming up with like an average cost for your business or a high-end cost for a project or month for your business, and then having that as a bit of a metric to say, okay, how many months of high-end business spending do I want to have in this account before I can then move on and actually take some money out? I think that'll help you a little bit. It sounds like you want to be conservative on this side and make sure you have enough. So getting a sense in the same way as you have the average number for your life, looking at that on the business side to be like really kind of diving into the needs there and building that out, I think might help you have like just a quick metric. It's not going to be right all the time, but it's going to give you permission. So much of this planning is about permission. Putting money into a gifts account gives you permission to spend on gifts. Taking money out of your, like, when is it enough? So building those rules for yourself, like, I promise, you can say, I need to save up 1 month of income. And then you say, well, actually, I need be 12 months. I've started to talk a little bit about in my own life about Chris's rules for freaking out, because I'm a bit of a worrier. So like actually writing down like at what point, if my bank account is here, what point can I actually start worrying? You know, and that might be something that's interesting for you to kind of build and think out, to be like, what is full in my business account? What is, I'm kind of really nervous about this because like I can't even cover one of these kind of higher end income months. But building up your own metrics for that, I think, will be helpful. Maybe? Awesome. And then I do think that it might be helpful within your, just keep taxes separate too. Make sure that that's not rolling around in your business account, because it'll give you that false sense that there's money available. You'll be able to see it more clearly if you make sure that that map's separated out.
We do have time for one more question. Perhaps we can squeeze that in. If not, we can call it a night, but I always urge our viewers to get in touch with our guest speaker via LinkedIn. That's a good way to follow you back. And if you have an Instagram account that you would want others to follow, by all means. Anybody else have any questions?
Yeah, while you're thinking about that, I'm going to drop my email into the chat here.
Yeah.
Feel free, if you think of emails later. I know that I like when I talk at your face for an hour straight, like Susan said, it can just be like, it's just a lot to soak in. If you think of some questions, feel free. Like our wonderful host said, my site is ragtoreasonable.com. I do monthly office hours amongst my other offerings, which is just free Zoom calls you can sign up for. If you ever want to just kind of chat anything out, that can be a helpful kind of venue for that. I also do one-on-one planning and one-on-one coaching and all that other stuff. You can find that information there. But office hours, and send me an email if you have any questions, and I'm happy to help in any way that I can. If I can't, I'll try to find somebody who can.
That's wonderful. And as usual, this webinar is recorded, and we will be putting the resources together. And I want to say a big thank you to everyone who joined us tonight for this webinar. Do keep an eye on your email inbox, because we will be sending you copies of the presentation along with the information and resources next week. I'll give it to Susan.
But if you can't wait that long, I do recommend checking out Rags to Reasonable, because there's amazing resources on Chris's site. Yes. But we do have, this was our 6th TD Culture Lab webinar of the series, and we have one more coming up on March 23rd. So if you're interested in joining us, we'll be talking to percussionist Mark Kelso and singer-songwriter Matt Zaddy, and they will be teaching us all the tips and tricks about recording from home, which we've all sort of become, experts at it over the last year with so many Zoom calls. But they're going to give us advice on which microphones might be the best, and things that they've learned over the past year of recording live shows and performances online. So please join us. You can get your tickets through Eventbrite, and you can learn more on our website at MississaugaArtsCouncil.com. So thank you again to Chris. This was absolutely wonderful. And thank you to everyone who joined us tonight. Hope you enjoy the rest of your evening.